if I had to start investing from scratch, absolutely no investments whatsoever, this would be exactly how I would start investing. Step by step of what I would do to grow my net worth. Stocks, ETFs, crypto, you name it. The first step would be to open an account with a commission-free broker and buy one share of the cheapest stock that I can find. Does not matter which company it is, the cheaper the better. I would do this because getting started is the most difficult part. Now that I have created my account and made my first trade, I will be motivated to learn how to invest instead of thinking if I should invest. Step number 2 would be making a budget. Now this is where most people struggle. Once they get their salary, they do not know where their hard-earned cash is going. Food, groceries, travel, it's all good, but knowing how much is spent on each of the big categories is absolutely essential. So I would just open up my banking app and analyze my income and expenses for the last 90 days. Take a pen and paper, make 2 columns and write down money coming in on one side and money going out on the other side. Rent, food bill, utilities, clothing, all of the expenses. Then see my monthly savings, which would be the amount coming into my account minus the money going out. If this savings amount is less than 15% of my income, I would try to reduce my expenses. The higher the savings, the more I can invest and grow my net worth. Now that I know my monthly expenses, my next step would be to create an emergency fund. The emergency fund size varies from person to person and their expenses. I would start with at least $1,000. If I am able to save this amount, then I would save 3 months worth of expenses. You can have a larger emergency fund, but for me, 3 months worth of expenses are enough. To help me create this emergency fund, I would firstly create a separate bank account. There are many banks where you can open a bank account for absolutely no fees. For each salary I get, I would automatically send this amount to my new account. This way I can create my emergency fund as quickly as possible. I have a detailed video here on creating an ironclad emergency fund if you want a step-by-step process on creating your emergency fund. The next step would be hitting the like button so that this video gets shared with other people who are also trying to get started with investing. All jokes aside, step 4 would be to set my investment time horizon. Time horizon basically means how long you will have your money invested. The farther your time horizon goes, the more risk you can take with your investments. As the time horizon of your investments increases, statistically speaking, you have a higher chance that you're going to have positive returns on your investments. So you can take more risks as statistics are in your favor. Let's say you invest your money for 2 years and the market crashes at the end of year 2, resulting in a loss of half of your investments. You will be in a big trouble. But if the same market crash happens in year 2 of your 10-year investment time horizon, you will still have 8 more years for your money to recover and continue to grow. If you look at the crash of 2020, it was a huge deal. But with time, the market recovered and grew even higher. So anybody who was invested for the long term with a diversified portfolio, their net worth not only recovered, but also probably grew as well. So based on my goals, I would set an investment time horizon of at least 10 years to help my money grow and recover from any dips or market crashes. Step 5 would be to assess my willingness to take risks. Now this step is essential as most of us think that we have a high risk tolerance. But in reality, we misjudge our risk-taking ability. To assess my willingness to take risks, I would ask myself what would be the largest drop I would be willing to take in my investments in order to stay invested. The last thing you want to do is panic selling at a loss. That means that you have realized your losses, and if the market recovers and the stock gains its value back, you will not be able to recover from your loss and will have to buy back into the market at a higher price, actually doubling your losses. I experienced my first dip in the market just 20 days into investing. In a single day, my portfolio lost about 6% of its value. 4% was actually because of the market dipping and me selling all of my investments. The other 2% was because I actually bought into the market after it had not only recovered the 4% loss, but actually went up by 2% since I sold my investments. Had I actually assessed my willingness to take risks before I started investing, I would not have sold at a loss of 4%. I have set my maximum loss tolerance at about 20% of my invested capital. So in combination with my investment time horizon, the recent market downturn has had very little effect on me. Step number 6 would be to get educated on the types of investment options. There are many different kinds of investment options available, from stocks to ETFs, crypto to NFTs, real estate and commodities, collectible like Pokemon cards, and precious metals like gold and silver, etc. But for simplicity's sake, I would just talk about stocks, index funds, and cryptocurrencies today. If I had to start investing from scratch, absolutely no investments, I would start with a broad market index fund like the S&P 500 index. This fund follows 500 of the biggest companies in the US. In my opinion, the S&P 500 is the most stable investment with a balanced risk to reward ratio, with an average annual rate of return being 7%. Now this 7% is for long-term investment time horizon. In the past 10 years, the S&P 500 index fund has given a 13.76% annualized return. But if you started investing in January 2022, your portfolio would be down about 15%. That said, I would have kept 100% of my investments in the S&P 500 index fund for at least first 6 months of my investing. During these first 6 months, I would further educate myself about individual stocks. What are company financials like assets and liabilities, profit and revenue, EBITDA, EPS, etc. so that I can analyze how a company is performing and how its trajectory is going to be in the future. Once I have familiarized myself with the ins and outs of stock analysis, only then would I invest in individual stocks. With time, I would increase my investments in individual stocks to 10%, but not more than that. In addition to educating myself about individual stocks, I would also look into the blockchain and how it actually works. What is Bitcoin, what is Ethereum, and what are altcoins. Also get familiar with some of the bigger crypto projects like Solana, Cardano, etc. as well. Even though I am a big believer in the future of crypto, I still think that crypto market is still in its infancy. So I would only invest the amount that I am willing to lose totally, as the probability of a 50% drop in crypto value is pretty common. I would only invest a small percentage of my net worth in crypto, no more than 2%. Step number 7 is consistency. The more you save and invest, the faster your net worth will grow. With consistently dollar cost averaging into the market, you can grow a very small amount of investment into a large amount with time. But there is only so much you can invest if you do not properly save from your income. In this video, I share 15 simple ways to save money that are easy to follow. Thank you very much for watching. Bleib gesund and I'll see you in this video.